although as you know, I'm not allowed to share the videos with you. So that you'll have to ask DG sir to give me the direction to do that. Shaurya, you need to be on mute. Okay, so what you see is that what I have done is I have put in some hyperlinks in between. So I was going through your notes, session notes, just to make sure it's easy for you to understand. I have put in some kind of hyperlink so that I cut down the clutter on the page. All right. And then there's a question from Siddharth on liquidity. So I have my answers to that. Instead of making it part of the notes, I just made it a part of a hyperlink. And there's another note which is in your student notes folder. This is linking to that. Okay. So the extra material, instead of cluttering the screen, whenever somebody asks a question, I may have to postpone some of the questions from today onwards because I need to finish the basics. So I've done this. So certain links, I've given you certain links on order entry and all that. And later on, for instance, there's a link to mean reversion versus momentum. You can read this. Then another question from Sachin. Whatever I answered, that text is now removed from here. It's been put into this file. Okay, and which is also part of your notes, and you can directly click from the hyperlink so that it becomes a little easier to read the basic stuff. Then Vipul's 2 questions all have gone into separate 5 hyperlinks. That's what we're going to do. So 9th August, our first point to discuss is actually project details. Bigger than that. Yeah. So here, project timeline. All right. So what will happen here if you go back to, and here I put in, here you see this file in your notes file. I've created a separate sheet, which is project notes, which means any, all the special notes, because this is your normal IPM notes. This is the normal sequence of notes you would do if we did not have a time constraint. Okay, we would do these notes and then do the project, and certain additional project notes which are required, like TA versus FA and all that, I will put in. Those are going to be hyperlinked to here. These will also be in your student notes folder. So I've just made it easier for you by putting, I'll be putting more notes here. Please check this, okay? And also remember to do these notes, otherwise you will not be able to follow what's going on in the class. So make sure you have these things cleared up, okay? Make sure you read these notes. Okay, so what we are doing is the project timeline, the first discussion point.
Sir?
Yes?
Sir, sorry to disturb you, but Abha is in waiting room. If you can check again.
Okay. Aman has also come. Abha, I'm admitting.
Yes,
Aman, what happened
sir.
to your phone? Okay, fine. I don't have a problem admitting if it's a say known. Yeah. So please make sure, guys, everybody, please log in from your DSB IDs. So at least take that much, care. Let's have that much discipline. Okay. Yeah. Where is the timetable? Yeah. So this is your project timetable. So up, which means what this means, project start. Okay, live graded trading, live trading. Okay, end of trial trading, which means all the tinkering you're doing with the TWS. Okay, all the tinkering that you do it until like this is a Monday, until the Friday before 14 September. Okay, and after 14 September, you will be doing whatever you do will count towards your project grade. Okay, and that all the buying and selling and the profits and losses that you have, that will count towards your project grade. This will go on for 5 weeks and it will end on this date, 16th October. Okay, so you'll have 5 weeks of real live trading. Up until then, you can practice. Okay, and as I said, please remember when you're practicing, don't try to trade too heavy and lose too much money, because your balance will go down. You have only $1 million, your balance will go down, and then when you actually have to trade, you will not be able to buy enough stocks, because you won't have enough money to play with. So be careful about that. Just come to the last point when you do your order entry practice, and don't fire the bullet. Just practice till the last, but don't transmit the order. and try to mentally track what's going on. Okay, when you do this kind of stuff, if we go back to here, we go back to the trading view chart, whatever you're practicing, you practice till the end, but don't actually, do the transaction so that it doesn't consume your, capital, and you don't lose money. In case it goes against you, you lose money. So that will reduce your investable capital balance. All right. So if you want to buy, you place an order to buy at 1441, a market order, but don't transmit on the TWS. Okay. So that's one. And then what you will have is, let me go back to this, which is, and the evaluation will be uh, drawdown. What is drawdown? Drawdown is nothing but the maximum drawdown will be something like this. If you look at, let's look at the SPY chart. So by the way, recently, guys, we had an important milestone. The S&P 500, which is the most important US stock market index, that has already crossed the all-time high. So if you see, now that's also gone to a new high. You don't see it here on the ETF, but the index did make a new high, I think, yesterday. So this pandemic decline, all right, if you go back, now this is the long-term chart of the S&P 500. These guys don't have much data, but on Yahoo Finance, you can see more data. So this is actually the internet bubble. This 2000 peak is the internet bubble peak, goes down. Then you have this rise here, which is, this is the credit crisis peak, 2007, then drops from there, and then goes up all the way. Now then, this is your COVID-19. If we zoom in a little bit, all right. If you zoom in, this is your COVID-19 decline, all right. And now this is already, the Nasdaq had already crossed, and the S&P has also now made a new high, all right. So what is drawdown? If you want to understand, it's very simple. Imagine that this is your P&L graph. I mean, this is your NAV graph. Okay. Remember, we have discussed NAV earlier. NAV is basically your total unrealized and realized P&L in your account. Okay, you might have heard of NAV for mutual funds, right? So if you think about this, imagine that this is not the S&P 500, but your P&L graph or your NAV graph. Okay, so if you have what is happening to your NAV as you make money, your NAV goes up. Then as you lose money, the NAV goes down. Again, you make money, it goes up and goes down. This is what is happening to your NAV. Okay, net asset. NAV is net asset value, which is shown on your TWS as NLV, L for London, net liquidation value. It's the same thing. The more general term in the industry is NAV. Okay, now here you see, I think some of this you will see in your, we may have discussed it in your calc file. I'll try to open that. I'm just trying to be very careful about how many files I open because I don't want to get a RAM problem. But this is your calc file, and we will try to use this as a board as well. Right, so we had, this is our board. Let's wait for it to load. Somewhere here I might have had a discussion. Please make sure you understand here, this is a session with Mukul where we had discussed certain points. I will go through here. So NLV, NAV is the same thing. These points are discussed here. Okay. So NAV is the more general industry term. Okay. And NLV is what you see on the IB page, the same thing. And this is what we are plotting here. Okay. Total cash balance, which is your realized PNL plus the unrealized PNL. Now here, this, I think I can shut this renders thing. All right. Okay. Now here, if you see that, if this, imagine that this is your NAV plot. Okay. Now what is maximum drawdown? Drawdown, understand drawdown is, you look at any two, when you're looking at drawdown for a NAV plot. Okay. It's an important concept in measuring returns, performance measurement in fund management. So make sure you understand it. So in any equity, when you're doing a performance evaluation for any fund, okay, need not be just equity, any fund, okay, there is a concept of drawdown. What is drawdown? You take two equity peaks. First, you plot the equity or the NAV. You take two peaks, okay, and you see what is the lowest point between those two peaks, all right, and then you calculate what is from the first peak to that lowest point, what is the percentage loss, okay, because this is actually a loss if you have it as a P&L plot. So you will, let's say this loss is say 60%. I'm just giving an arbitrary number, okay. So if this is 60% means this went to 100 and then this came down to 40, okay. If that's the case, then this is 100, this is 40. So we say here the drawdown is 60%. That's what we say. This is what drawdown is, okay. And then again, here, if you take this peak and if you take this peak, these two peaks, you can see one lowest point between these two peaks. Again, you calculate the drawdown here, okay. What is this? Maybe the drawdown here is 70%. I'm just giving an arbitrary number, okay. So you note these things. You note that this drawdown was 60%. You note that this drawdown was 70%. Okay, and you go on and all these places you can calculate drawdown, all these lows. Then you come to another big COVID-19 drawdown. Okay, maybe this drawdown is let's say 55%. I'm just giving an example. Where would you calculate this? This is between from here and the new equity peak. These two new peaks in between lowest point. So what is the percentage decline in the lowest point after the first peak relative to the first peak? Okay, so you calculate here, and maybe you find from here to here is a loss of, let's say 55%. I'm just giving arbitrary numbers, okay? So in this case, the maximum drawdown is 70% because we said this is 60%, we said this is 70%, and this is 55%. So in this case, we would say that maximum drawdown is 70%, okay? So that's what's going to happen in your project, okay? Maximum drawdown. Okay, drawdown is the not maximum. Okay, so you plot the NAV, and the reason I put an equity here is this is equity in the sense of debt and equity on the balance sheet. This is not equity in the sense of equity markets. Okay, this equity. There's a term. The reason I use this term is because this is the term that we use in industry. Okay, when we are plotting the NAV, say there's an NAV plot, we will say, oh, look at my equity, this equity peak, this equity peak, because the equity in the account was at the peak over here at these points. That's why. Okay, so there's a different use of the word equity, slightly different use. Okay, so just given a loose definition of drawdown, and so this is going to be the evaluation of your project. Okay, so it's going to be if you look at project evaluation, essentially, if we look at 12th August. Let's take okay, here if you say that your total return is say 25%, right? And your max drawdown is, let's say, 6%. I'm just giving an example. In this case, your profit to maximum drawdown ratio will be simply this. We will just divide this by this. All right. So that's your score. And in this way, I will rank all the scores and yeah, so that's your score. And in this way, I will rank everybody's score and accordingly, I will assign the grades. Okay. So the top person will get the highest grade, then the lowest person's grade I will decide arbitrarily. It's just like your, yes.
Sir, would it be on percentile basis?
No, not percentile basis. Let's say the highest score is says 9. Let's say the highest score is 9, and let's say the lowest score is say 0.5 or something like that. Okay, then I will arbitrarily decide to give a grade to the top ranked student. So let's say the grade is say I give say 85% to the top student. Okay, I will decide that. Then for the lowest student also I'll arbitrarily decide a grade. Let's say I decide to give 35% for the lowest student. And then in between somebody who has got say 6, somebody whose score is raw score, the ratio profit to maximum drawdown is this. Okay, and there is your percentage. Yeah, all right, okay, this is the case. We can put one row here in between to see things properly. Okay, so if this is the case, the top student I give him 85%, the lowest student I give him 35%. So the student who has got 6, his score is going to be basically 0.35. Okay, so it will be 0.35 plus. Okay, we will find out how much. I don't want to write the formula right now, but essentially what I will do is I will find out the difference, the raw score range. Okay, so 9 minus 0.5. Okay, will be your one raw score range is 9 minus 0.5. Okay, this is your raw score range. Then the percentage range is 85% to 35%. Okay. Now, then I will find out one statistic called what should we take? Percentage point per raw score point is what we should take, right? We should take, yeah, we will take the percentage point per raw score point. So, which means divided by. Are you following? Is everybody following this? Anybody have the problem? I decide these are the raw scores which come from your actual data, project data from your account. These are arbitrarily assigned by me. Top score percentage, lowest score percentage. I decide that. Okay. Depending on how serious I think people in the batch have been, this number will be higher and this will also be higher. Otherwise, they will be lower. So now you understand percentage point. This is basically dividing this. No, what have I done? No, this is not correct. Actually, it should be 8.5. It should be not this, but it should be the 0.5, which is I-26. Yeah. So you see 50% percentage point range between the top and bottom, and then 8.5 raw score points between the top and the bottom. This is clear. So you have percentage point per raw score point. All right. So now what will happen? The question is, what will 6 get? Can make this a little bigger. Okay, what will 6 get? That's the question. Okay. So 6's marks, percentage marks will be this plus we will have this particular score, which is H 25, I think. Yeah, H25, $25. Okay. This is the percentage points per raw score points. Okay. Times the difference in 6's raw score point to the lowest raw score point, which is here, which again we can put as $24. So their percentage is this. Okay. You understood the ranking now? We spent a lot of time on how I'm going to grade the project, but this is important for a transparency point of view. You should not feel that I am grading you arbitrarily, okay? Now, here also that there are penalties. Now, some people will not submit the results on time. So if say the person who got 6, profit to maximum drawdown ratio is 6, that person has not submitted the project, submits the projects 3 days late, then I give a penalty of 2 percentage points for every delay or 1 day of delay. So this becomes 6% penalty. Then actually her number is going to be 67.35 minus 6%. So 61.35. That will happen, and those are penalty points, okay? So that will come, that is, you can avoid your penalty points by following the instructions. It's not a big deal at all. Nobody should have penalty point. Penalty means that means you're just sloppy and you're not following the instructions. So there's no need to have, but every time we have, every batch we have penalty points because people are sloppy about submitting the returns on time and all that. Okay, so is everybody clear about how the grade will be determined? And this percentage then automatically goes to your letter grade, right? You can, yeah.
Sir, we have to sell everything before the date you gave, like we start our trading on 19 September and you gave us the date 19 October. 14 September, sorry, sir. And you gave us the last date is 16th, sir. So, sir, before 16th, we have to sell and submit everything.
Yes. So, in fact, you will know what I will make you do is I will show you how to extract the account statements. So you will submit. Yeah. So on Friday, ideally, you have to close all your positions. Okay. The last day of trading, you should close all your positions. Okay. And then report your, and then, I'll show you how to extract the account statement PDFs, and you'll have to upload those also into your Drive folder for submission. And that's what, yeah. So I will give you 16th October. These are very easy to do actually. So I will give you like at least 1 full day. So I will have, that's why I said grades project submission is 17th October. So Friday night you stop, and you have Saturday the whole day till Saturday midnight will be your submission deadline. So I just need you to submit very simple data series. It will be just the date. Okay, I'm not going to make you calculate the drawdown, because then I'll have to check everybody's formula. Although we should actually do that calculation in the class. Let's do it this way. So your submission is going to be just nothing but you're going to have a date. I'll give you the file. There'll be a date, and then there'll be a NAV. All right. So whatever is all these 5 weeks of dates, only 5 days a week. Okay. And then so basically 5 weeks, 5 days, so 25 rows. You'll have 25 rows. And what was your NAV on that day? What was your NAV next day? What was your NAV next day? That's all I need you to submit as a spreadsheet file in a series. Okay. And this I will of course verify against your account statements. I will do random audits against whether you have given a wrong figure for NAV, because this will determine your total return. It will determine your drawdown, and therefore your score, which goes over here. All right. And that determines your grade. All right. Is everyone clear about that? So we have spent some time doing this. So Vipul, is your question answered? Is your question answered?
Yes, sir. Sir, we have to calculate every day's NAV.
Yeah, you don't have to calculate. You'll see it in the, ideally what you will do is you will take it from your account statement, or you can keep track also for yourself, because what I would
Okay,
suggest,
okay.
do it yourself from the account view in the TWS login, okay? And take a note of your NLV every day. Remember this NAV actually for IB is actually shown as NLV, all right? So I think for your own trading, you should know what is happening to your NAV. So keep a note on your own for your informal note. Okay, every day in the morning you can take a note, or in the night before going to bed you can take a note of what is your, keep a note or keep your own spreadsheet. But later on, when you make the final submission, this is from you have the, you modify this figure by looking at what is the figure in the actual account statement PDF. There's an account statement for each day. So there's an official figure which may differ from your figure a little bit. Okay. So I want the official figure. So, but you can keep this for your own track to see what is happening to your NAV every day. All right. So these are the only two figures you'll have to submit. Your life is quite,
Sir,
yeah,
Sir Sachin this side.
yeah,
Sir, US market is open at 7 p.m. and close at 3 p.m.
yeah.
in night. Sir, if we want to do intraday, so we need to wake up till 3 p.m. or then we analyze the all over my stock.
Correct,
3 a.m.
correct.
Sir,
So
So,
yeah,
yeah. So I want to ask, like, you told us to close all our like opening positions by 16th.
so 1 minute. Sachin, are you satisfied with the answer?
Sir, you didn't give me any answer.
No, I said, yeah, that's what, if you want to do intraday, then you have to trade within the US time frame. No?
Yes, sir. Yes, sir.
So 3 p.m. is no problem for at your age.
Yes, sir.
So it's, when we were doing our MBA, nobody was sleeping more than 4 hours a day. I'm not asking you to fall, but I mean, young people, your body can take a lot of punishment, right?
Yes, sir. Yes, sir.
At this age, you can just work hard. You know, main thing should be to gather knowledge. You guys are so lucky. You have to understand. When I was at IIM Ahmedabad in 1988, 90, we did not even have anything called the internet. And now you guys have live data with the best trading software in the world. Okay, all this information, so you can absorb absorb knowledge. Use all this for absorbing knowledge.
Yes, sir.
All right. Yeah.
Yes,
Next.
sir.
Yeah. Somebody else was speaking.
Yes, sir. Mukul here. So I want to ask, like, you told us to close our all opening positions by 16th.
Yeah.
But the that 16th is according to IST or EST.
No, it is all EST. Basically, by end of Friday trading. Okay.
Yeah.
I'll
Okay.
put it here. So I'll say close all positions by uh, by what is called New York close.
Yes, sir. I want to add one more thing. So the market is open till, I guess, according to Indian time, till 1:30 in the night, not till 3 a.m.
Yeah, because they have this. I'm not sure where they are in terms of. They have this summer-winter time change, right? So
Okay.
you can figure that out. It doesn't matter.
Daylight savings.
That is whatever. I mean, it's pretty late in the night in India. So because they have these summer-winter time changes, and then yeah, so around that, sometime around that time, yeah.
Okay, sir.
All right. So this is so this answers all questions. You'll have to close all positions and submit the return. All right. Okay. So this is your project mechanics. Okay. We had to do that because it's an important thing. Okay. So what will be the evaluation system for the project? And as you can see, the importance, advantage of using this as a whiteboard is that we can actually do numbers as well, and we can also write, and it's very easy to format. So this is what we are doing. So please make sure that you, when you are studying your notes, what did we cover? You look at two things. You look at your session board in the spreadsheet, the calc file, and also this file, okay, which keeps a track. And I'll try to keep these files uncluttered. So I edit the notes later on to make sure it's convenient for you. Okay, so let's now go on to our further discussion, because I need to again quickly. So please make sure you guys, everybody, make sure you do all these notes. and also do all the notes that I am pasting into this. I will be pasting more notes. Please check them. Okay. I'm not going to inform you every time I put a new note. You better check. It's your responsibility to check and make sure you cover all the notes. I'll be putting more stuff here, FA versus TA and all that. Okay, so let's continue here. We continue with DPs, that decision problems. Okay, we continue with them. And so if we go back here, we see that we have covered a few. I've added one point here. I just want to make sure you understand. Okay, so DP4 we are writing as a buy, sell, or wait bias. Okay, which means we do not immediately buy, sell, but it gives us a buying bias or selling bias. Okay, based on what we see in our 2 time frames. And DP5, I've added a little note here. Okay, I wanted to put it in the same day as where we wrote this. So just make sure you understand that our discussion here is happening with respect to our current project. Okay, so in our current project we are dealing with spot instruments. If we go back to trying to find. Yeah, okay. So I'm just trying to find my asset classes, this num thing. So what we are discussing in this project is you are going to be trading in equities, and you are going to be trading the instrument type you're trading is spot, because most global equities, when people say I'm trading on the NSE, usually they mean, unless they mention options, they usually mean that they are trading spot instruments in equities. All right. So this is what you're doing. You are trading in equity spot in this IPM project. In FDRM, you will be trading equity options. So again, you'll be here. You'll be in equity options. FB is just one example. Okay, so you'll be in this intersection in FDRM. And in IFM, you will be trading futures contracts on currencies. You'll be on commodities, currencies, and debt. Okay, interest rate contracts. So these are your 3 projects, which will give you exposure to these 3 different types of instruments and several different asset classes. All right, so now what I was saying here is in DP5, when we write DP5 as entry price, okay, is now here the answer is very simple, because we had given the entry price as we had just given the decision problem. There are 1 decision problem, entry price, and it has 3 possible answers. Okay, but in fact, if you are looking at things like futures contracts or option contracts, okay, this decision problem itself will be split up into further sub problems, sub decision problems. Like there'll be 5.1, 5.2, 5.3, which we will come to when we do these kinds of instruments. Okay, just to understand. Here the problem is very simple because we are doing spot instruments. All right, so that's just one point to understand. So DP5, I just want to list out the decision problems. Now DP5, then 6.1 you know, and 6.2. Okay. One second, I'm just trying to look for my. All right. Okay. So we have one more decision problem left. Okay. You have seen the problems that we have discussed. Okay. If you look at this, we have done a discussion of asset classes. The first 3 problems are asset classes, markets, and instruments. Okay. These are, I have solved it for you. You don't really have to worry about it, but we discussed it because you should know what the actual, you should know what the actual Okay, you should know what the actual decision problems are. So I have given, we had discussed this, but in your case, in the case of this project, we have already solved these for you. Asset classes, equities, instruments of spot, and markets are the specific list of markets given to you in the spreadsheet file that is IPM project. Okay, tickers. There's somewhere here I've written so A here means A is answer. Okay, A is answer. Where is so A is answer. First is our equities. Markets is see the project list in your spreadsheet, in your notes. There's a file for IPM project list. Those tickers, the 33 tickers, those are the markets that you're allowed to trade. And then instruments is spot. Okay, these are the answers. A is the answer. So we move on, and we have discussed these asset class market instruments, whether to have buying bias or selling bias. Then what should be the entry price? Then what should be the exit price? It has two parts: exit with profit and exit with loss. Okay. So now my question is there anything else that we have left behind? Is there anything that we have missed? Let me ask some individual people here. We have lots of participants. As long as you don't get any funny messages in between, then I have no problems. Okay, let's ask Ummat. Can you identify any problem that we have not yet identified? Any decision problem?
Hello.
Yeah, Ummat, can you answer this?
Hello, sir. I'm audible.
Yes, I can hear you. You understand? Is my question clear?
Sir, can you repeat the question once again, please?
Okay. So the question is that let's put it this way. Let me just list it out once again here. Make it very easy for you here. I'm recapping the decision problems. Okay, you can see the decision problems all in one view. Let me make it a little smaller here. You can see. Okay, the decision problems are which asset class, and that could be could be currencies in our case. Which market, which instrument, whether to buy, sell. This we write as a bias. Okay. All right. Then we have the entry price problem, which we have taken as DP5. Then we have exit with loss, exit with profit. You can see all the decisions. So my question for Ummat is that can you identify any decision problem that we will have when you go to trade in the markets? Okay, say like for instance, if we go back to FCX. So Sachin is bullish on FCX. Now we look at a 3-month chart, and he wants to buy FCX, okay? And we assume that whenever we go on to the next decision problem, we always assume that the previous one has been solved, and we assume some kind of answer, okay? Like here we have assumed FX is currencies is the asset class. So we always assume. So in the case of Sachin's case, we have assumed that buy sell bias for him is buy bias, buying bias. One second, just drink some water. Okay, and so Sachin has a buying bias, and then for entry price, we assume that Sachin's solution is market order. He always wants to trade with a market order, and so he has decided that he will enter with a market order, and he has decided he needs to take this decision: exit price with loss. Where will his stop loss be? He decides that he's going to buy now at 1441, a market price. That's his strategy. And then his stop, he decides, will be here. So 1247. Okay. So this decision problem is solved. Exit with loss, he decides, will be 1247. Okay. or 12.45 or whatever, just below this low, we call it 12.45. 14.41 and 12.45 market price, entry price. Exit price with loss is 12.45. Then he looks at the 5-year chart to determine. Now he still has to decide this problem. Where will he exit with a profit? Okay, 6.2. So he looks at the long-term chart and he thinks this is going to $20. So he solves the second problem, exit price with profit plan, 6.2. He puts it as $20. So enter at 14.45, 14.41, exit at 12.45, and exit with loss, exit with profit at $20. Okay, so that's all done. Now my question for Umar is, any decision problem that Sachin still has to solve? We are using Sachin as an example here for all investors, a prototypical investor. Is there any, let's look at a long to short term chart to see maybe a little better. Okay, we can look at 1 year. Yeah. So is there any decision problem? My question is there any decision problem that is still remaining that Sachin has to solve? Yes, Umar, is my question clear now?
Yes, sir. Yes. Sir, sir, I think that sir, he should look at NAV in this like for how much time I should keep. Like he decided the exit price with profit. So sir, he needs to think that I should exit with the profit one, or I should exit with the loss. Like sir, he had range in between, but
Okay, I
sir, I
understand.
think
Okay, but whether he sits with profit or loss, he does not get to determine that. The market determines that. He cannot
yes,
influence
sir, yes.
the market movement after that, which he cannot control. Okay, let's ask somebody else. Let's ask Bhavya. Is my question clear, Bhavya? What am I looking for? I'm looking for another uh, decision problem. At this point, we are trying to theoretically list down what are the decision problems that any given investor like Sachin will face. What are the decisions he needs to take? You saw 6.1 because he needed to decide. He can't just decide, okay, I'm buying. He needs to also decide before he buys at what price will he enter if there is continuous, if he suffers continuous losses. At what price will he exit with a profit if the market goes in his favor. He needs to take all these decisions. Okay, these are specific numbers. 12.45, $20. These are specific numbers which Sachin has to come out with before he does the transaction. Okay, so now my question to Bhavya is, so Umar has said NAV is another decision problem. So in a similar way, can you think of another decision problem that we have to solve? Yes, Bhavya?
Yes, sir. Good morning.
What is the decision problem? Any other?
Sir, in this we need to fix a stop loss.
No, that's already done, no? 6.1.
Yes, sir.
Then I'm asking after this, is there any seventh one? Is there a seventh decision problem? Actually, more than seven. It's actually 8 because 6 has 2. So we have 7 decision problem. The 8, is there an 8th decision problem?
Sir, that the people follow the herd.
People follow?
Follow the herd. They follow what other are doing.
Yeah, that's okay. I understand people have to learn. But why? I mean, how is that a decision problem? You understand what a decision problem is? That these are decisions that an investor has to take before he can trade, or sometimes they do it after they trade. People following the herd is something you're describing that, it's like saying one day we will all die or something like that. These are statements. Okay.
Yes, sir. Yes, sir.
Decision problem. Like decision problem is what are you going to eat for lunch? Should you order pizza? Should you order, chole bhature? What do you want to order? Now, if you order one, then you can't order the other. So it's a decision you have to take. So I'm talking about decision. Okay, let's ask somebody else. Let's ask Rajat. Yes, Rajat.
Yes, sir.
Yeah. Is my question clear? Yeah. Siddharth has raised his hand. We'll come to him. Rajat, you understand my question?
Yes, sir. Question is,
Then yes. What is the answer? Number 8. Decision problem number 8.
sir, to choose an alternative financial plan.
Alternative financial plan. What do you mean by that?
Sir,
So we'll just say herd. We will call this herd mentality. Okay, to take the point that Bhavya raised. There's a technical term for this. It's called a herd mentality. We don't say people follow the herd. What she meant is this particular technical term. Yes, alternative financial plan.
I don't know how to explain exactly.
Okay, never mind. Okay, let's go now one by one. Sachin has raised his hand. Siddharth, let's go to Siddharth first. Yes, Siddharth, what are you saying?
Sir, I think another decision problem can be how much Sachin should risk his capital for a single trade.
So, can you be more specific?
Like how much, sir, what percent of the capital should he use for a trade? If you put a stop, and how much capital should he risk for a single trade he is doing?
Yeah, okay. So let's take, let's take for instance, what I will do is I will put this entire discussion here into one box so that we don't have any confusion. Okay, and then we will have a different box. All right. So under 19th August, we have multiple discussions. So Sachin is entering at, let's take this. Sachin is entering at 1441. Entry is 1441. Okay. Then exit with loss is let's take this 1441 here. Exit with loss, what Sachin has decided is going to be 1245, let's say. Okay. So exit with loss, he decides. I hope everybody's clear how these decisions, I mean, how you will actually make them, that will come to is a little bit more, it's a little bit more complicated. But he looks at the chart and he looks at this 1245 low. He looks at the 3-month chart. I'm just giving you a flavor of it. He sees this low. If you see even 1 year, you can see on this 1-year chart, there is a low at this point. Okay, so he identifies this low. He reads off the chart. And we can actually take the lesson. Look at, put the cursor here. What is the low? Is actually 1244. So he will put it one step below 1244, and that is, so we'll make it 1243. So 1243, just one. As soon as this breaks, he wants to get out. Okay, so he wants to cut his losses. So this 1244, read off the chart, 1 point below that, 1243. So his exit price with loss plan is, entry plan is at market price 1441. Exit price with loss, then exit price with profit. Okay, exit with profit is, all right, is, we said arbitrarily $20. Okay, because he looks at the long-term chart, 5-year chart, and he sees that there is a high, what happened here? Somehow I lost the, okay, let's just try some other chart, Morgan Stanley or something. Okay, and then we'll come back to FCX. All right. Okay, so he looks at the long 5-year data, and yeah, and and he sees that there is a peak around $20. So he thinks it will at least go to this point. So this is how he takes the decision, okay? You can have more questions on this. I'm just giving you a broad idea. So he will look at this chart. I have given a note also, one of Vipul's questions on support and resistance. In this context, this will also be called support, and this will be called resistance, where he feels the price will have difficulty going above this point. That will be the resistance. And this will be the support, which he thinks should not break, okay? This 3-month point, this is the point here, which is, if you look at 1 year, this he will project as a support point, which should not break a previous low. And that's why he will put his stop below that point. If the market goes below this, then he thinks it means big trouble. So let's get out. Okay. So that's the plan. So that's what Sachin is doing. Entry price plan, exit price with profit. Okay. So my question for Siddharth is that, so this is the next decision problem. I'm going to put another row. Okay. This is what we are discussing here. More DPs. Okay, that's our topic here. We are discussing. Okay, we'll put a box on this later. So very good. Yeah. So what Siddharth is saying is capital loss, etc. So one thing, the question I have for Siddharth is, you may get some background noise here. Just ignore it. So the loss per share. Okay. Loss per share. Okay, how should I write the loss per share figure?
It's 1.98, 14.41 minus 12.43.
Yeah, so we have a simple formula, okay? We always want to write it as exit price. Now we will see this. So please remember to move seamlessly between your two boards. You will always, no, it's not what we want. I want to take this loss per share. All right, loss per share, or generally P&L. Okay, everybody understands P&L, profit and loss. So we say trade P&L. Okay, loss per share or trade P&L. Okay. This we always want to write it in this format. Okay, exit price. We write PX is short for price. Okay, these are all trading jargon, basically shorthand. Exit price. 1 minute. Let me just write it down. Exit price less entry price. Okay. Yes, somebody had a problem.
No, sir. Sir, into number of shares. Last one.
Yeah. Okay. So that's very good. Excellent. So total, that is, so we are talking loss per share. We are writing as exit price. Here, exit price minus. It's actually not loss per share. We should call this P&L per. P&L per share, because P&L is more general. That means it can be profit. It could also be profit. Okay. P&L per share we are writing as exit price minus entry price. Okay. Right. So this is the thing. So if you see, you write it like this, it makes sense because you have. Sorry. Let me write this here. At the time where he's the exit in the exit row. Okay, let's write it exit price minus entry price. So here projected loss is 1 point, my maximum loss projected, I mean ignoring commissions. Okay, please remember in the discussion with Mukul, commissions have to be factored into the cost of trading. All right, so you have to check how much commission they are getting charged. So make sure you read this discussion with Mukul. All these notes have to be read. Okay, please understand. If you don't, then you ask me the question. Okay, here we are ignoring commissions. Okay, so projected loss per share is this, and for if you exited with a profit, again we write exit price minus entry price. So Sachin is considering the two scenarios. How much money will I make if I'm right and the price goes to my profit target? How much money will I make, and how much money will I lose if I'm wrong and I have to exit and the market keeps dropping and I have to exit below my stop loss. So these are his calculations, okay? So you can see that if we write the formula like this, always write it like this, exit minus entry. If you write it like this, then losses come out with minus and profits come out with plus. This is clear to everyone? Okay, you have understood what I'm doing. Anytime anybody does not understand, Utsav has a hand raised. Yes, somebody else also had hand. We are still discussing Siddharth's question. Yes, Utsav, your question is on this point which we are discussing.
No, sir, it is regarding another decision problem.
Okay, we'll come to that. Now let me first finish this because I'm still quizzing Siddharth on his input. Okay. So Siddharth said how much capital to risk. So he can see we are talking about risk. So we are not talking about the profit side. We are talking about risk. Okay. So my question for Siddharth is that per share loss projection is 1.98. So can you be more specific about your point of how much capital to risk now?
Yes, sir. We can calculate how much for a trade, how much share should he buy. So for that, he can take a percentage of his capital and divide it by this loss. So he'll get to the number of shares he can buy and number of capital, amount of capital he can risk.
Okay. So Siddharth has actually, okay, how many shares to buy? So Siddharth has actually given us the answer that I was looking for. Now this is your remaining decision problem. Okay. So we want to generalize this. In this case, you're dealing in shares. In this case, Sachin has decided to buy. So these are specific answers, but we don't want to be so specific when we are writing the theoretical listing of decision problems. We write it in a more general way, and the way we write it is like this. We write it as right. So the way we write the general decision problem DP7, actually it is number 8, but we give it as DP7. The 6 has 2 parts. So the general statement of the decision problem is number of units or position size. I think somebody was already mentioning, I think Mukul was mentioning when I was doing the calculations, that in order to project the total, he had said that into number of shares, total loss will be, okay, total loss will have to be into number of shares, okay. Total P&L, okay, if you take this, you have to, if you take more DPs, the next is actually, this is your DP problem here, okay. Number of units or position size. If you put this here, all right. So whatever you put in here, suppose it is 500 or 550 shares, okay. So the total P&L will then obviously be deferred as per share, and so this will be into this, and we can you can take this and put it here. Should give you the right number. Yeah, number of shares into 559, which is the profit per share, P&L per share. Okay, these are your total P&L projections. So the point I was trying to arrive at, I wanted to have a comprehensive listing of decision problems that you guys should be aware of. Okay, that when you're doing this project, what you're actually going to be doing is that you are going to be solving. Well, you won't have to solve 1, 2, and 3. I already did it for you. You will be continuously solving for each of the markets, the 33 markets that you have. You will be continuously solving these problems: 4, 5, 6.1, 6.2, and 7. And so you will have to continuously solve these problems. These are not easy to solve, but we'll give you some guidelines. And this is where your learning comes, okay? The more you practice, the more you learn. The more you practice, the more questions arise, and the more you learn, okay? So this is the objective of this project. So please remember that you have to work very hard. you will not learn if you don't do. Many times the reason we had to make this individual project is that many times many students were not doing anything, they were not involved with the groups were not trading. But if you don't do that, you lose out. Okay, so at this stage, please make sure that you behave in a more mature manner and you don't lose out. Let's see.
Sir,
Yeah, I'm coming to Utsav questions. Yeah. And who else? Utsav has a question. Yeah. Utsav, yeah. Yeah, who is this?
Sir, Vipul this side.
Yeah, one sec. Vipul, let's go to Utsav first. He had
Okay, sir.
Okay, Utsav, what is your point about decision problems?
Sir, I after seeing this this decision problems, I realized that the time period is not mentioned in it.
Okay, time period.
Yes, sir. I think either my internet is unstable or yours, because I'm not able to get your voice.
Can you hear me now?
Yes, sir.
Okay. So time period is not a decision problem as such, because remember that I have already given you you remember Sachin asked a question. I don't know whether you're talking about that kind of view about time period, but if you remember, Sachin asked a question about.
No, sir, not that. That was regarding the entry and exit points. I am talking about, like Sachin just mentioned, that if we have to do intraday trade, or we can have a short, we can have a CNC trade for a short period of time, or we can have a longer period of time.
Yeah.
So according to that also, our decision will change, no? That if we want to hold it for a shorter period of time or a longer period of time. And from that, my next decision problem comes out. That is what type of analysis we'll be following while we are seeing our charts. Either we will be following fundamental analysis or technical analysis. So these are the two problems which I came across.
Okay, so those which you're discussing 2 points. You're discussing. Let's take the second point first. Whether to follow fundamentals or technicals. Okay, you see here I've written solved by FA or TA. Okay, or AFV is arbitrage free valuation. I'll come to this later. But generally you'll be using FA or TA. In this project, you don't have a chance to use AFV. So these are actually part of your DP4, the buy sell problem. Okay, so when you're correct that you have to decide which kind of paradigm to use. But I have not listed that as a major decision problem. It becomes a part of this buy sell. Whether to buy or to sell, how you decide. And in order to decide that, you have to first decide whether you want to use FA or TA. Okay. So so your second point I'm putting in here. Okay, it's part of this. So you understand it as part of this. And the other point which you mentioned about the time frame, that is actually automatically determined by the 6.1 and 6.2. Okay, so in this case, if you can see, Sachin has given 14.4 and 12.45 exit price with loss. So this is generally not likely to happen intraday. Okay, this is quite a distance away, so it will probably not happen in one day. So you don't have to separately decide time frame. Okay, time period, and time period you've also given the list of FA or TA. Okay. Now, these are actually general points raised by people. Okay,
sir.
So I'm just going to put them. I don't want people to get confused. Okay, these are just general notes which we are writing. Okay, except for this one. This is nothing else goes into our decision problem listing. So I'm just going to put it in small caps. So right. So this also gets captured under your buy sell bias. The FA or TA time period gets captured automatically by 6.1, 6.2, because now you see 6.2 for Sachin is very far away, $20. Okay, it's very unlikely that this will happen one day. Okay, yeah.
Sir, same question I have, that we in this project we need to focus on time, because sir we have only 1 month. If we see in the chart in 1 month, if you will see the free for chart for 1 month, it's almost changes up to $2 to $3.
Yeah.
Maximum $2.
Yeah.
So I think we don't expect the greater profit in that.
No. That what else can you do if as Sachin is saying,
buy larger share or invest in different stocks. We have all those 33 tickers.
yeah. So you can no, you can't go to different stocks. You have
But
to
sir, we have also 33 tickers now.
yeah. So you have to stay within the list of 33 that I have given you. Okay. But what you
Yes, sir.
if you look at the position problem that Sachin is saying, that from 1440 to $20 is only $5.50 per share profit. That's not much. Okay. And he won't get 20, he's going to get much less. So because the time period is less. So he's saying it's quite low. So then what you do is you increase your total PNL by increasing the shares. Okay. So you
Number of shares.
2000 shares.
Buy larger units.
But, 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 remember, very big but here. Okay. Very important. Yeah. Very important that if you increase this, now you see what is happening. The profit also went up, but the loss also went up. You saw that projected loss
Yes,
because
sir.
when you're buying, you don't know. When you buy, you have no way of knowing whether you will suffer a loss on this trade or a profit on this trade. Okay. So you have no way of knowing. So you have to play this thing very carefully. Okay. This will come later. We will figure out how to do it. Okay. Siddharth has already given you some kind of idea of how to do it. Okay. But initially, I just wanted to first make people understand clearly that,
Sir, one thing also, sir.
sorry.
Yes, sir. If we see the FCX chart, can we show FCX chart for 6 months?
Yeah.
Sir, if we show in the March 15, 18, March 18, March 18, matlab 18 March. If you show the 18 March chart, it's all-time low, close to all-time low. It's to 5.31,
Yeah. Yeah.
almost
Yeah.
4 points. Yes, it's a 4.22. It's all-time low,
Yeah.
close to all-time low. And this situation is when the pandemic started, the COVID-19 lockdown started. So the effect on this share, the FCX share is there. In this lockdown, this share will be uh, increased by almost 120 to 122%. It's almost 100%. Increased by 150% share in this lockdown in a 3 months period.
Yes.
So we analyze that the share will go up in upcoming 1 or 2 months. So we need to invest the larger in this share. In my analysis, I think.
I think what you're saying is that you're actually looking at historically how it has performed and how it has performed historically. And
Also, sir, this share is perform good in this bad situation, in COVID bad situation. The series perform very solid.
okay,
Yes,
yeah.
sir.
So you can do that. You can do that, but just understand what you're doing is you're saying that it has done very well, so it will continue to do very well. That's broadly what you're saying. You can
Yes,
do,
sir.
but just be careful. This is not a guaranteed method. It's not guaranteed to be successful.
Sir, every analysis is not 100% sure, sir.
Yeah. I just want to make sure you understand that.
Yes,
What
sir.
you're saying is not a bad approach. It's a reasonable approach. But one second. Shubham is waiting. Okay, it's a reasonable approach, but you have to just be aware of this. Just want to make sure that everybody is aware of this, that no method that you use is going to be foolproof. So that's why this is not science. Unlike science and engineering, once you design a method, we know how to, make a microwave work, and then the microwave always works. Okay, there is no failure. So this is not the same as science. So therefore, whatever method you use is just actually there may be a very high error rate. So you have to be aware of that. A very important learning, which most people generally in the finance books and all these are not explained properly. So this is very important to understand. Okay. All right. So this is the point. And let's look at. So is you're clear, Sachin? Your question is clear.
Yes, sir. Yes, sir. Totally.
Yes, Vipul. What is your question?
Sir, my question is, sir, we have 1 month for trading, and sir, we can trade as many time as in this 1 month we can. So, sir, do we charge any brokerage, like any paper account brokerage or something?
Delivery charges.
No, no.
Any charge?
So if you see, we were analyzing some of Mukul's dummy trades, practice trades. We found the brokerage is somewhere between 1.05 to 1.12 for 100 shares. Okay. So you can check the brokerage. You can look at the brokerage. I think your question, Vipul, is about what is the brokerage, correct?
Yes, sir, because it's different it's different from each broker, sir. Some broker charges are very high.
Yeah.
And so I want to know about this.
Yeah. So in this project, you are going to be affected by only by Interactive Brokers and their brokerage schedule. And there is no difference. He will not charge a separate brokerage from Abha and one separate one from Shubham. So he will charge the same for everybody. Okay. So, but you need to be aware of this brokerage number when you're planning your trades. Okay. The point I'm trying to make here is that you know that this charge is somewhere around 1.12, let's say 1.15 approximately per share, per 100 shares. Okay. Each side. Buying, selling, separate round turn commission. Okay. One side is 1.1, say make it 1.15 or even make it 1.2 approximately. Okay. You can read the document from the Interactive IB web page. Okay. So which means, let's say that, say Sachin's budget is, I don't want to lose more than 4,000 per transaction. Okay. Let's say that's his plan. Okay. Then in this calculation, he sees that if I buy 2,000 shares, I have maximum loss of 3,960. But this calculation is not complete because he also has to add the brokerage figure here. He needs to calculate the brokerage, okay? And he needs to have a figure. So my point is that, I'll just make this very small so that, all right. So he should have a figure when he's calculating. Suppose his calculations actually tell him that per transaction, maximum risk should be 4,000 or less. I mean, maximum risk should be $4,000. So he's looking at this and saying, okay, great, I can do 2,000 shares. But calculation is not complete. If he's planning to do 2,000 shares, he should make a brokerage projection, okay, of 2,000 into, let's put the brokerage here. Let's put the brokerage here. And this we have put as 1.2. If we are writing 1.2, okay, as this is our, this can be our input, okay, that this 1.2 is what? We went to the IB website and we found out that approximately on 100 share trades, we will pay $1.2 brokerage, okay, per 100 share lot. So therefore, if Sachin is planning 2,000 shares, his projected brokerage for this is this one, okay, is going to be $2,400, okay. So total PNL can be modified by adding this, okay, minus, okay, this is okay. This is like then minus this figure here, okay. So actually, is that correct? Around 4,000, yeah. So now what happens is Sachin's, no, this is something something wrong here. This is not 2,400. Actually, this is has to be divided by 100. That's too high a figure because that is for 100 shares. Okay. So is this correct now? J28, yeah. So 2,000, how many 100 share lots are there in that? In times 1.2, okay. So $24 brokerage. So now Sachin can see that his total projected loss is actually 3984, okay, not just 3960 because he has to include the brokerage figure also, okay. So that partly answers your Vipul's question also. This is how you will do it. Is this clear, Vipul?
And one more thing, sir. Do we pay and do we have to pay any exchange charges like STT, stamp duty,
yeah,
or
no,
GST?
Yeah, those are actually we had a discussion with in this discussion with Mukul. You can see those are bundled, and in your case, those are all factored in. Okay, those in your case, those are all factored in. Okay, into this figure. If you look at your IB, there are two types of commissions: bundled and unbundled. Okay, in this case, they are charging you bundled commissions. So you just all the fees that you're talking about, what Vipul is talking about, these are important points that when you're actually trading, you have to look at your commission structure. Is it unbundled or bundled? Everything is included in your total commission, which is, it includes all your exchange fees and, you know, STT and all those things. Everything put together is this 1.2. Okay. So this, I've just assumed 1.2. It is around 1.15 or whatever it is. So this, you figure out the figure and then you do your calculation like this. Okay. This is clear. Everything is included in this, Vipul. Okay. Is this clear? Hello. Yeah, Vipul.
Yeah, sir. Sir, can you share the any image or anything, any link of interactive broker charges if you have?
Yeah, you just go to the IB website. You just go to their website, Interactive Brokers website, and you figure out the trading commission charges. Okay, I'll do that later, but you can just go yourself, go and search for Interactive Brokers, and where you downloaded the software from. Okay, the same web,
Okay, sir.
and then find out the trading commissions for India.
Okay, sir.
These guys actually have a live trading account also for India. So those commissions are the same as what you would pay in live trading. Okay.
Okay, sir.
So that comes, yeah, okay, fine. Right, okay, so this is what, no, so the point is we highlighted that we have one more decision problem, which is the number of units or position size, which we have to solve, okay? I hope everybody's clear about this. Now, I'll just give you one more quick tip, okay? There's actually a more detailed way we can have a longer discussion on this, but since we're approaching almost the end, I want to make sure that I equip you guys with a solution. Now, if you go back quickly, I'll just quickly go through this here with you guys. Okay, I'm just here. I'm not going to be very interactive, but I'm just making sure that you have the knowledge and you can practice. That's my main concern. You'll notice I'm very much under time pressure because I want to make sure that you guys have the basic knowledge and then you can start practicing. And then you'll have to start trading from this date I gave you, right? From this 14th September. So until then, you just keep practicing. So what I'm doing is, you look at your figures. We are going to discuss, there are concepts here also, investable capital. What is the investable capital given to you here, guys?
$1 million.
Correct. Okay. So this is one, we'll just take
$1 million, sir.
Yeah. Into, remember you're trading US equities. So we can make this a little bit smaller. And I always like to see this. I like this kind of formatting here. All right. So this is your investable capital. Now, the logic here, I'm just here, it's a lecture tutorial mode. I'm giving you the lecture because I don't have time. I want to make sure you have this knowledge. And this is an important concept, okay? When you are trading, again, ideally I would have asked somebody, okay, what do you think and this and that. I don't have the time right now. So I'm just telling you, okay, that when you have $1 million to invest, it is generally true that most people will not be willing to lose the entire in $1 million. When they are putting in $1 million to work in the equity market or any market in a trading account, they're not willing to lose the whole amount, okay? So risk capital, we can actually talk about risk capital percentage, okay? All right. So the way you should work is, you should ask yourself, okay, what percentage of my investable capital is risk capital for me? All right. So let's say it's 40%, okay? Say I'm not willing to lose more than 40% of my investable capital. In the case of this particular project, you may want to treat it as 100%. It's up to you, because remember, the more aggressively you trade, the bigger the position size. The bigger the position size, the higher your risk of loss, okay, projected losses, and the higher can be your drawdown, and that will affect your score, okay? Your drawdown will be based on unrealized P&L also, okay? The NAV includes unrealized P&L, please make sure you go to the Mukul session here and make sure you understand all these discussions, okay? Unrealized P&L, realized P&L, all these are concepts, okay? You need to make sure you understand them properly. All right. So it's not an easy decision to go to 100% risk capital. That means 100% of your 100% of your investable capital is equal to risk capital amount. Here will be this into, right here. So right, we are almost done. I'm just going to take 2 minutes extra. Just okay. I'll just wrap it up. Okay. So you need to take a decision on this. So this is not an easy decision, because if you trade aggressively, you may lose more money. You may have higher drawdown, and that will drive down your score. So it's a double-edged sword. Okay. If you don't trade aggressively, you will not make much money, as Sachin pointed out. If you trade aggressively, you could also have higher drawdown. So your denominator will go up, and your ratio will go down, and therefore your score will go down. So it's a double-edged sword. We are making you, but this is life. Okay, you have to deal with it. You decide how to balance it. So let's say you decide that 60%. Okay, so 600,000 is your risk capital amount. Now, risk per trade, I would say, actually project number of trades, total number of trades in the project period. Okay, so let's say this is 200. Okay. I'm just giving you a quick and dirty method of determining how much to risk on a particular transaction. Okay, projected number of trades is 200. All right, and so we are 1 minute over, but I'll just do this. Projected number of trades is 200, and then you say percentage losers. We'll come back and we'll do this later. So I'm projecting 200 trades in this short period of time, 5 weeks of trading. Percentage losers, let's say I'm projecting, say, 70% losers. Okay. So losing trades becomes 70% into 200. Okay. So 140 losing trades is what I'm projecting. Okay. Then I divide my risk capital. Total risk capital amount is 600,000 divided by total number of losing trades is 140. Okay. So this actually, this should have been put over here, but we'll do it later. Okay. Right. So the point is, if you risk $4,286 per trade, per transaction, including brokerage, then you will, and if you have 140 losing trades in a row, the worst case scenario, okay? So you understand how this is coming. You can check the figures later on, okay? 140 risk capital amount divided by 140 losing trades. So if you risk 4,286 per trade, lose 140 trades in a row, then you will lose only total of $600,000, which is equal to your projected risk capital. Is everyone clear? So now what you do is, how do you solve this decision problem? I'm just giving you a quick and dirty method. I'll release you then, 3 minutes over, but I'll just quickly tell you. Now, how does Sachin decide how many shares to buy? He sees that his 4,286 is a maximum loss per trade. So you can write an algebraic formula for this. We'll do it in the next class, but you can do trial and error. Right now he's at 3,984, so he can do maybe 2,500 shares. 4,900, it's too much, because his figure is, his maximum loss figure is 4,286. So 2,500 not possible, because it's too big. It's 4,980. That's not possible. Okay. So he needs to reduce this to 4,000. Still too much. So in this manner, he will keep on finding out whether how many shares he can afford to buy, so that his loss is not more than 4,286. Is this clear? You guys are following what I'm doing? Yes. Everybody is hungry for lunch. I have taken 4 minutes extra, but I think you have understood what we are doing. Okay. So, okay, I'll release you guys now. I don't want to eat into your lunch. Okay. So, anybody? Okay. So you guys can leave now, please. So I hope you guys heard what I was saying. Was I audible? Last part.
Yes, sir.
Yes, sir.
Yes, sir. Yes, sir.
Yes, sir.
Class is dismissed. You can go now.
Thank you, sir.
Please make sure, guys, I'm not putting a lot of pressure on you guys in the class and all that. Please, for your own benefit, make sure you're doing all the readings. Any problems, anything you don't understand, notes, you have to tell me. Otherwise, I can't figure it out. Okay, you can go have lunch.
Thank you, sir.
Okay, sir. Thank you, sir.
Take care. I'll stop the recording. Okay, I'll stop it now. Later on, you can get in touch with your CR if you want to.
I have a question, sir.
Yes, Siddharth. Yeah.
Sir, I was asking about like if we are in if we have some stocks and we have bought some, sir, should we? I was asking about pyramiding it. So, sir, should we do it or shouldn't we?
See, pyramiding, the question about pyramiding is, so let's put it this way here. Okay, loss per share or trade. Okay, this is a separate question. Pyramiding is actually what we do is, at this point, I have not, what you're asking is about pyramiding winning positions.
Yes, sir. If my view is the same and the stock is rallying up, so sir, should I buy more of the same stock or should I do something different?
Actually, pyramiding, we will discuss this in later sessions. We already have a module on this. Pyramiding winning positions, okay? So there is a way to do it. There are many ways to do it actually. But you can actually, you can apply the same thing. Suppose your figure is this, okay? Maximum, let's put this here. Maximum risk per trade. Right. So we'll rewrite the formula. The maximum risk is 600,000 divided by projected. This is a very conservative estimate. Okay. Maximum number of trades. Okay. So maximum risk per trade is 4286. So now you can have further policies on this, but let's say you stick with this 4286. So in this case, when you pyramid, you can actually, so suppose you, let's say, so initially, let's say you bought FCX when it was say, at say 11 and a half. Okay, you bought it at 11 and a half, you put a stop over here and you ensured that your loss was at that 4.2K, that figure we have. Now that it's gone here, you can maintain the same risk. Now suppose you feel it's going even higher. So you already have, let's say, 1,000 shares from here, okay, 11.5. Now you feel it's going to go even higher to $20 and you feel it won't go below this. So you can move your stop for the first lot from here. You can move it to here, okay, because this is a new stop. So on the first lot, you are not going to face any risk as such. There is no open risk, what we call open risk. Because the first lot is at 11 and a half, and if it is stopped, it will be stopped at 12.45. So there won't be any loss on it. Okay, you follow it?
Yes, sir.
Okay, so this part is clear. Now you can add a second lot. You can pyramid, but you should follow your guideline here. This is the worst case. That in the worst case scenario, where here, yeah, here. Okay, in the worst case scenario is 4286. In the worst case scenario, you don't risk more than this. You can have further policies on for pyramiding. How much of this you will take off the table? You may decide that 50% of the what we call the closed P&L, okay, will be taken off the table. So in the new trades, you will not risk that much. You can have those fine-tuning policies, but let's not complicate matters. Let's assume you're always willing to keep this amount as open risk. Okay. So in this case, what happens? You bought some 1,000 shares, 1,000 shares here, no more risk on this. So you have the full 4286 available to bet. You feel this is going higher, you want to buy more at 1441. How much more will you buy? Because this one has no risk on the first lot. Okay. And then you can now buy more is same calculation. 1441 minus 1245. How many shares can I buy so that my total loss does not exceed 4286, including commissions? Okay. The other situation that can happen is that we will actually do this. Hopefully, we'll have time to do this as a problem. That you may have a situation that you have this problem, right? 4286 maximum risk per trade. Now you have gone to this situation, and let's say that your first lot was bought not at 1150, but somewhere here, maybe 1350 or something, 13 and a half. Okay. So if your new stop loss, if your new stop is at 12 and a half, so 13 and a half to 12 and a half, the first lot will also have some loss. Okay. Now you're talking about buying a second lot. So how many shares can you buy in the second lot? So that's why I list the pyramiding is listed as a sub decision problem. Okay. So let me write it here. Pyramiding winning positions. Adding more positions when original lot is profitable. Okay. This is what pyramiding is. Now the question is, this is what I'm writing here is that this is a sub TP under BP7. Okay, because the fundamental problem, the way you asked your question is, should we pyramid or not? That will be part of your trading policy. Okay, that I've not listed as a decision problem. That goes really into the trading policy. You can have a trading policy to pyramid or not to pyramid, but I think generally it's always good to pyramid. Okay, within the risk limits. Okay.
Sir, instead of pyramiding, we can also average our trades. Like for the second problem, you said that if the something is it's going down, so we can take the average loss and we can then decide the position next.
No. Averaging is a thing that relates to losing positions. Pyramiding is for winning positions. Averaging is a term that we use for losing positions. Okay. Averaging is totally not recommended.
Okay. Is it the same as pyramiding? Like if we are losing, then we'll set off the trades and then we'll go short.
That's a new decision. Going short is a new decision because now you're changing your view completely. Earlier you were buying and now you're going short. So that's a different decision. So that's not considered as part of a sub decision problem here. So there are when you're talking about sub decision problems of units position size, only pyramiding is a problem because pyramiding is a term that is used for winning positions. We don't say pyramiding for losing positions. Okay. So the question, if you buy at 11 and a half, it keeps going up. Then we talk about pyramid. If you buy at 11 and a half and it keeps going down, unless you had a plan to buy in 2 lots from before, okay, then we don't really call it averaging. It's a part of the plan. Averaging is, when you're talking about dollar cost averaging and SIP and all these kind of things, when the stock market is, any market is falling and you're a buyer, you buy once and it keeps on falling and you add to your losing position. That's called averaging. Okay. So that is totally not recommended. So I don't even discuss it. I just, of course, mention it and tell you that you should not do it. So is this clear?
Yes, sir.
Pyramiding is a term that we use for winning positions. Okay. So let me put this here. So there are 2 types of situations that can happen. And the actual formulae that you'll have to, in both cases, the real problem that you have, because what price to buy at, what is the stop, these are separate decision problems already listed. The real problem that you have in position size, in pyramiding, is that, like suppose here, if you bought initially 1,000 shares at 13.8 or something, now it's gone to 14.4. So the first lot is showing a profit. But the new stop, Maybe when you bought it at 13.8, the stop was here. Okay? But the new stop has been raised to here. So the original projected loss is now much lower. Okay. And now your decision problem really is now you want to buy more because you think it's going even higher and your new stop is here. So the question is, and you buy at market prices always, let's say. So the real question is, how many more shares can I afford to buy if I am pyramiding? Okay, given the new dynamic, okay, that my first lot entry price is 13.8, or let's say, and the new stop is this one. And how much can I buy? So here what you have to do is figure out your 1,000 shares, whatever you bought first lot. What is the projected loss on the first lot? So basically this minus this times number of shares in the first lot. Okay. So let's say that figure is $2,000. Are you following, Saddam?
Yes, sir. Yes, sir.
So let's say that figure is $2,000. Okay. Now you already know your max risk per trade is 4286. Now you have $2,000 will already be consumed by the first lot. Okay. So this 4286 has to be reduced by $2,000. All right. And now, so therefore, now you do a fresh calculation with 2286. With 2286 in your pocket, you repeat this calculation over here, which we were talking about. How many shares to buy? You have only 2286 to play with. Your entry price is now 1441. Your stop is here. You have only 2286 to play it. So now you figure out how much your position size can be. Is this clear?
Yes, sir.
Okay. So there are two, in the case of pyramiding, there are two sub scenarios. The sub decision problem is pyramiding, and there are two sub scenarios. One where the preceding lots are all profitable at the new stop, where your previous lot is at this price entry and the new stop is here. So the preceding lots are profitable at the new stop. So in that case, you just take the maximum risk per trade figure and figure out the decision position size. And the second scenario is where previous lots are not profitable. So the projected loss on previous lots has to be deducted from the maximum risk per trade. And then a new figure of risk per trade for the new, for the new trade, potential new trade that is being calculated, that is being thought about, that has to be then figured out. It's just, you understood it, right?
Yes, sir.
Okay, so that's
Sir, question. It is not related to this, but sir, when I calculated, when I opened my account with SMC, then we had very less capital. So sir, calculating positions with that formula was very difficult because the prices were high and the number of trades I could do with was very less.
Yeah.
So sir, is there a way to get around that, or do we always need a good amount of capital and a less percentage for that formula to work?
Yeah, there's no real workaround. You do need to have a good amount of capital based on, especially focused on, depending on what kind of trades. You notice here that one of the things that I did in your stock screen is that if you look at your stock screen, I've given some hyperlinks to the stock screen further up. Yeah, this is your stock screen. Now, why do you think I did this? You'll notice one of the elements of the stock screen is actually that why did I put this price under $50? Because I know you have only $1 million to play with. So if I put in, if I don't put in this constraint, you have some prices like Amazon, Google, Apple. These prices are in thousands of dollars. Okay. So you won't be able to buy too many shares of those and your full investable capital will be used up. So this is a problem that you're always going to have. So in general, it's always better to have more money. So you can't, and the way you manage if you have less money is what I've done here. $1 million actually not a lot of money. Okay. So therefore, I have tried to get around the problem by choosing stocks under a certain price, so that I don't have a problem of running out of investable capital. But this, as Sachin pointed out, this has some other problems because as he's correctly pointing out, that this stock is because it's a low price stock, it's not really going to move by too many absolute dollars, maybe $3 or $4 in a month. Whereas if you look at Apple, it moves, hundreds of dollars in a month, but Apple's absolute price is also quite high. So this is the problem that you're going to have. So there's no correct work. This is what you do basically. How you solve this problem is what I have done here. Is this clear?
Yes, sir. So one last question I have. Sir, it is related to your experience when you worked for banks or when you did market making operations. Sir, were you under the pressure of always performing best, and the job was always was it online because of the profits you made or not?
What was on the line? A job?
Yes, sir.
Yeah, that is always true. So there are certain types of jobs which I held where if you did not make your budget within 6 months, they would fire you. So this is quite common, and it may not be 6 months, it may be 1 year. But the point is that in trading jobs, because the rewards are also high, so it is always true that you will have this kind of you will get fired if you don't perform. That is true in most jobs, but in most jobs they give you a little bit more time.
Yes, sir. So because here what we can do is hedge our risk, we can decrease our risk, but if the market doesn't go our way, we can lose.
Yes. So there is no guarantee here. There is no guarantee in this business. Even the top traders are losing money. So nobody here is, this is the peculiar kind of business where the amount of effort you put in is not directly related to your compensation. Unlike say chartered accountant or a lawyer, if they put in some number of hours, they will bill the client for that many hours and they will get that money. But in trading, you can work very hard. It's like any other kind of sport where the rewards are very high. Like if you look at professional tennis or any kind of professional sport, the many people work very hard, but they're not able to win, right? And mostly the winners take everything. Most of the winnings go to the winners. This is the way it is basically. So these are some of the considerations that should be considered by you before you decide as to whether you want to join this. Is this something you want to do for the rest of your life? I mean, is this something that you want to make your career, right? So,
So what's your opinion about it? I mean, you have been doing it for a lot of time.
yeah, so my opinion is for everything else, whether you decide to become a carpenter or a baker or a chartered accountant or a lawyer, do you enjoy doing it? That's the main thing. So you should not. I think basically you should always choose something which you should not like. I have been very lucky. I have actually not worked a single day in my life because every type of job I did, I enjoyed doing it. So it has never felt like work for me. So you have to find something which you enjoy doing, and so it should not feel like work at all. And if you enjoy something, you should just do it. Don't worry about what will happen, because sooner or later in every profession you will be penalized if you don't perform. It's just that the results come very quickly. So good or bad results come very quickly. Okay.
Yes, that's all I wanted to ask. Thank you, sir.
Okay. So address by, I'm just writing down your point about investable capital adequacy of address by choosing low price stocks in an equity trading program. This is only for an equity trading program, or reducing position size. Okay. Another thing, that if you're trading currencies, okay, that what you'll have to do is basically when you have investable capital low, you have to reduce the position size. That's basically the way of doing it. You choose low price stock, so you reduce the position size. Okay, so these are the 2 points. Okay, that's it. Any other questions? Can we close for today?
Yes, sir. Thank you very much, sir.
All right. Okay. All right. Take care. So I'll see you guys next time, Friday, I think.